Well, good morning, everyone. Thomas Montgomery here. We get together with our distribution partners and now our clients on most weekday mornings, 8 o'clock Central. And then we record this and post it on our YouTube channel for later viewing. During our time together, we talk about strategies, techniques, share success stories. We're here to support each of you. Today, we're going to talk about the startup business funding package. We're going to talk about what it is, why it might be relevant to you or some of your clients, and then also how you're able to monetize it. So our topic today is the startup business funding package. So you see the screen shared here, and let's talk about the sequence first before we get into the package itself. So we know as branches, we're out helping clients with the credit and funding program, right? That's what we do. So you're able to generate around $12,000 for each client that you generate through the credit and funding program. There's 4 essential elements to get a client set up, and that's what you're doing on the front end as a branch owner. You're getting the client under agreement, number 1. You're getting the client's payment, number 2. Either they're paying you in full or they're paying a $250 down payment and financing the rest. Number 3 is you're having them complete the soft pull authorization, and you have that link in your branch onboarding email. And then number 4, you're helping them complete a personal financial statement. So that is the same. We're not changing any of that. But once you have done that, then we're going to have a call together and review the client's mitigating circumstances, look at what types of funding they would qualify for immediately, and start planning for what we need to do to get them from here to there, which means here where they are as they present themselves in the beginning of the relationship, and there representing what they need to, where they need to be to get qualified for their full capital raise. With that being said, the startup business funding package is something that you may recognize is needed. So let's say that you've enrolled a client, because we don't have prerequisites, right? The clients can have a business or not have a business. They could have good credit or they could have bad credit. None of those are requirements. But let's say that you've enrolled a client, you have completed those 4 steps. You have them under agreement, they've paid in full or in part, they've completed the soft pull, and they've completed the PFS. What if we realize they don't have a business entity yet? Does that mean it was a mistake that they enrolled? Absolutely not. But if we're trying to get business funding, to no surprise, we need a business, right? Because we can't get business funding without a business. Could we pursue just individual consumer finance? We could, but that's usually not what we want to do. And typically, individuals will have less borrowing capacity as an individual than a business would. So the norm, the vast majority, almost all of our clients are chasing after business funding, not just personal funding. So here we're talking about the startup business funding package, because at this point in the process, as we've talked about the client onboarding, what if the client doesn't have a business? Well, you might then at that point want to introduce to them the startup business funding package. So, let's start with the who. Who would this be applicable to? Clients enrolled in credit and funding that don't have a business yet. We'll know that through the onboarding process. When would this come up? This would come up after the client has contracted, we're doing the onboarding, and you realize, the business doesn't have, or the client doesn't have a business yet. So that's the who, and that's the when. So let's talk about the what. What is included in the startup business funding package? And then we'll conclude this segment with talking about what's in it for you, how you get paid, which is going to be very lucrative, but we'll get to that in a moment. So you all know we received the grant, The Startup Business Funding Package comes from that grant that we received. It's a turnkey resource to help form new businesses that are positioned for fast funding. These bullets tell us exactly what's included. This is what's included. Nothing else is included. What's on these bullets is what's included. So let's go through the bullets. The first thing that we do in the Startup Business Funding Package is provide them a business address. The business address is essential. It's at the core of the foundation of becoming qualified for business funding. If we don't have a true, unique business address, we're at a definite disadvantage for our capital raise. So in the Startup Business Funding Package, the first thing that we're going to provide them is a true, unique business address. Well, what does unique mean? Unique means it's not a shared address. If you go to a Regus, R-E-G-U-S, or a WeWork, or many of these different companies that provide office addresses, in most cases, maybe not in all, but in most cases, they're using a shared address. So what that means is multiple businesses / people have the same address. Suite 400, for example. So there's lots and lots of people that have Suite 400 through their system. That doesn't meet the credibility standards that you and I are trying to accomplish. We need a unique address. So someone could have Suite 400 and the next person has Suite 401, 402, and so forth. That works. But we need a unique address to really be positioned for a successful capital raise. So again, if you bring a client into the credit and funding and we realize, they don't have a unique address. So not a shared address, not a post office box, not a residential address. It needs to be a commercial address. Can't game the system. We can't pretend that our back bedroom is a commercial address. Every address in the United States is coded by the United States Postal Service. So we need to make sure that the client has a commercial address for their capital raise. And if they don't, then they might be a good fit for the Startup Business Funding Package. So that's the first bullet. The second is after we provide them the address, then we will file with the Secretary of State to actually form a new business. So the function of this grant we received is based upon creating new businesses. So you might say, well, Tom, what if the client already has a business? Then they wouldn't qualify for this. This is grant subsidized to start new businesses that are positioned for a capital raise. So this is the second bullet. It's part of the process. So what if the client already has a business? Well, great. Then we'll use their business and their address. Oh no, that business isn't compliant. Well, then they could start a new business, couldn't they? Right? They could keep the current business they have. We'll call it Company A, but we could start Company B together and use it for the capital raise. See? So don't get hung up thinking, oh, they already have something. Well, if they already have it, then let's use it. Well, what they have is not good enough. Well, then let's start Company B, an additional company, do the capital raise off of it. Make sense? Third bullet is we help them get their EIN, and you and I know that's not a big deal, but we start with the address, we file with Secretary of State, get the EIN, then we get the business bank account open, of course. Now we're going to help them build their business credit. We hired a young lady, and that's what her expertise is. She's going to work with these clients to help them build out their business credit profile. What does that mean? There's different credit bureaus for business credit than there is personal. For personal, we have Experian, Equifax, and TransUnion. For businesses, the big three are Dun & Bradstreet, Experian Business, and Equifax Business. So different bureaus. Business credit works differently. It goes from a 0 to 100 scale. 80 or above is considered good. So that's what we're going to do through the Startup Business Funding Package, is help them build their business credit. so the business can qualify for funding, in many cases without a personal guarantee, without a PG. We will also transfer to them $10,000 in assets that's transferred over. And so then those $10,000 of assets can provide collateral for funding and can be liquidated for deposits into the business bank account. And then the way that we set up the business address is it qualifies geographically for the Chapman Fund. Don't know if you're familiar with the Chapman Fund, but the Chapman Fund doesn't come from a bank, doesn't come from a credit union. It comes from a taxing authority. And so maybe that sounds bad, but it's actually very, very good. So what that means is it's tax-supported funding designed to start small businesses. So this is the value proposition in clear bullets for the startup business funding package. The client will receive this package if you want them to be presented. So in other words, you're the branch, you've got credit and funding clients. If you believe that this would benefit your client, then you introduce it to them. Now let's talk about cost and let's talk about your cut. Well, as a branch, we do a 50-50 split, so no surprise. So the cost is $2,500, which is a really good deal. People often spend more than that just building out business credit. But the cost of the startup business funding package is $2,500. You collect that from the client, you keep half, and you send half to us so we can fulfill the bullets. So it works just like our other branch relationship. You're the interface with the client. We're behind the scenes providing the services. Client pays $2,500 to you. You keep half, you send us half. So with that being said, what questions, what concerns do any of you have about this available arrow in your quiver? As usual, Timothy has the first question, and he's asking, can a client enroll in this that's not in credit and funding? They can, certainly, but that's not really our focus. Our focus is getting clients that are in credit and funding and helping them become what? Qualified for funding, because we're guaranteeing them $100,000. So with that being said, this is typically a resource that will just very easily, very organically come up. You've enrolled someone in credit and funding. We determine they don't have a business, or the business they have is not set up properly or optimally. Great. Let's either start a business or reset and start a new business, provide them this value proposition. They pay a one-time fee of $2,500 to you. You keep half, send us our half, and then we implement. All right, Trevor's asking more about the Chapman Fund. So the Chapman Fund is a loan. It's not free money, so don't confuse that. It does need to be repaid. The good thing is it's easier to qualify than normal funding. The bad thing is that it has a max, a cap of only $250,000. So that makes some people upset. You know, they want more than $250,000. They feel like they deserve more than $250,000, but that's all they can get with the Chapman Fund. But we can do what's called stacking. We could go ahead and get them their first $250,000 through the Chapman Fund and then use other sources afterwards. All right, so there was Trevor's question. And Trevor also made a reference a few minutes ago. This is a really big deal that a lot of clients don't understand how important the address is. And so in many cases, lenders, especially for larger loans, will ask for a copy of the lease to show that you have a unique commercial address. Of course, we're able to provide that because this is legitimate. But if they don't have a lease and it's not a true commercial address, there's many lenders now that will decline them, that they won't get approved for funding just off of that, even if everything else is fine. Credit's good, the other three C's, credit, capacity, cash flow, even if all three C's are met, we see some lenders that will not approve it if we can't provide a lease. So for a unique commercial address. All right, so then Adam asked, how long does the client get to keep the business address? So we'll provide the business address permanently, and it's a unique address. So we actually bought a commercial building that we use for the offices. And so the building has a lot of positive attributes, but it's not meant for people to come show up and come work here. It's where our staff is. It's where I am right now. But it's a true commercial address, but they're not actually getting space to come work at, but they have a true business address that we're able to use for funding and other purposes. All right, so who else has questions on why addresses matter or the startup business funding package? Kim asked about the state. So the state, the address, we bought a unique, we didn't buy unique, we bought a commercial office building, and it's in Texas. The reason that we bought the business in Texas is because it provides access to the Chapman Fund. The Chapman Fund, I told you earlier, or at least I inferred, is based upon a taxing authority. Therefore, the only businesses that can get the Chapman Fund must be in the Chapman Fund's taxing district. So that's where we bought the building that we provide the address. Now, some people aren't very sophisticated. They think, well, I live in New Hampshire, but doesn't my business have to be based in New Hampshire? No, it's very common for people to form and own businesses in other states. That's not a barrier at all. So a lot of people will go to Wyoming or Nevada, Delaware, because there's different pros and cons different states have. But when we set up the business, we're going to set it up where it has no state income tax, which is great, and also provides geographic access to the Chapman Fund. So great question, Kim. But again, if you have a client that already has everything in place, they don't have a problem. So then you and I don't need to provide a solution to it. But alternatively, I believe you'll run into some clients that are not properly positioned. And so then if you want it, it's up to you, it's your client, you could introduce this. The value proposition is quite simple here. You could copy and paste these bullets and ask them if they would like to participate. If so, they'll pay you, you'll collect that money, you'll keep half, send us our half, and then we'll work together to implement. You'll be the interface with the client. We're behind the scenes, puts an extra $1,250 in your pocket. So what's your feedback? I'm looking for feedback. So we've got Adam and Andre and Bernard and Charles and Eric, Veronica, Jeanette, Ken, Kim, Lon, Pauline, Ron, Sanya, Terrence, Trevor, many others. What are your feedback on this resource? So it's not a change of who we are or what we do, just letting you know this is an arrow that's in your quiver. So if you have clients that are not credible, their business isn't set up credibly, this is an optional resource that you could introduce to them. If you don't want to, it doesn't matter to me. You put $1,250 in your pocket, and I would suspect probably half of your clients would benefit from this, but that is up to you. Andrea says she was late, so she'll watch the replay. That's fine. And you can learn more about the Startup Business Funding Package here by watching this training video. Let's see. Adam asked, would they be a sole proprietor once you filed with the Secretary of State? No. We're forming a business entity, not a sole proprietorship. We wouldn't want a sole proprietorship for several reasons. Number one, it leaves too much liability, too much risk to the business owner. And then secondly, there's tax advantages of having a true business entity. And then third, we look much better on paper. We look much more sophisticated to have a true business entity rather than just being a sole proprietorship. Okay. Ron says it's a good resource, but what about financing. Well, that's a great point. So you know, Ron, and other branches, that the cost is $2,500, half's going to you, half's going to us. We need our half to cover our cost to provide this scope of services. So if you wanted to be flexible with them, you could get half down and you could finance the other half with them with whatever terms that you want. You could get them enrolled in the credit and funding program if you wanted. And so that, well, I guess typically they're already enrolled in the credit and funding program. So we could be raising capital through that to get them funding. I don't want to go too far off, or theoretically, you could take them to the free funding proposal, and this would allow us to get them a free funding proposal and get funding for it. But that's really not where I wanted to go with this conversation, but that's what that tab is for. But you're right, Ron. There's a cost to having a business set up properly. There's a cost for you and I to provide the scope of services to the client, and they need to pay for it. Now, if they need financing, then that's fine. Then that's the whole purpose of the credit and funding program, is to help them raise capital, or they could simply come over to the free funding proposal and we could get them some funding offers. Okay, Trevor says, what if they have some of the bullets, but not all? Well, that's a great point, Trevor. So you know, Trevor and others, what's included, right? So you see what's included. So this is what's included in that package. If they sign up for the package, which means they pay you the $2,500, you keep half and send us half, this is what they receive. So Trevor, you'd have to be kind of more specific on what they don't want, because what I feel like you're saying is they don't want some of these 6 bullets. And so I'm not offended by that, but I guess the devil's in the details. Trevor, which of these 6 bullets, called bullet 1, 2, 3, 4, 5, 6, in your example, Trevor, which of these 6 bullets does a client not want? And then maybe we could vet through if it's still workable or not. Okay, so Trevor's going to respond to that. We talked about Ron's question on funding. Ken asks, what entities does this package offer? I don't understand the question, Ken, but if you ask it differently, I'll try to answer it. Kim asked a really good question. So can the client do the credit and funding for personal funding and get personal funding initially and then come back and do this later? Absolutely. That is correct. And then Trevor asked a question, which is a good one, and I didn't really want to go there, but now we've opened Pandora's box. So yes, clients can come get a free funding proposal without being enrolled in the credit and funding program, but it's not plugging them into your branch. It's not plugging you into the cash flow. So yes, I mean, anyone theoretically could come get a free funding proposal, but it's not accomplishing probably your goal of running them through your branch. Okay, and then, so Ken was asking about type of entities. So in most cases, we're going to form a corporation. Corporations, in our opinion, are preferable and are best suited for a capital raise. So Ken's question earlier that I didn't understand is, what's the type of entity? We're going to typically form a corporation. Okay, so Trevor say back to his question. So he's saying that clients have the first 3, but they don't have the second 3. Well, so that's a good scenario, Trevor. So if they want the startup business funding package, we're going to provide that entire scope, because, for example, they might have an address, but the address isn't in the geographic area for the Chapman Fund. So you can't get bullet 6 without bullet 1, because the address has to match the geographic area. So I think the easiest way to approach it is, if they have an existing entity, either we can work with them to get that entity compliant and optimized for funding, which is fine, or they can just hit the reset button, start a new business through the startup package, and we can do the capital raise off of the new entity. That doesn't require them to close or get rid of their prior business. They don't have to make any changes there. It's just the capital raise would be based upon this optimized business versus one that is not optimized. Hopefully that makes sense. All right, so then Adam's asking, can he charge more for it? Yes. Yeah. So if you want to increase the price above the normal 2,500 as a branch, you have pricing authority. So I do know that some of you are charging 5,000 for this. So then with a 50-50 split, it's 2,500, 2,500. So you do have that flexibility. The minimum that we need to execute our portion is the 1,250, 1,250, which is 50% of the normal 2,500 to do what we need to do. So theoretically, you could charge 1,250, couldn't you? Because with 1,250, you would be writing off any profit that you would receive, which is questionable, but your choice, but it would be enough to cover us. But it's a 50-50 split at the normal price of 2,500. The minimum that we need for our portion to provide the services is the 1,250. So theoretically, you could go down to 1,250. If you went below 1,250, now you're subsidizing the client, which you could choose to do, but wouldn't necessarily recommend. All right, any other questions? So the goal today was to help you understand that we do have an existing resource, been very successful in helping clients that don't have a credible business for business funding. Now, they don't have to do this, of course, but if you wanted to introduce this, you could. You get paid, they get a great value proposition, and it helps us get them funded. Questions, comments? Okay, so Timothy's got a question, and that's really important, and I didn't make it clear enough. So what you notice is nothing in here says anything about a performance fee, does it? Right? So if a client comes and signs up for this, but isn't in credit and funding, then there is no performance fee. There's no performance fee. It's not 10%, not 5%, it's 0%, because there's nothing hidden here. This is the value proposition. So that's important. That's why I mentioned normally you'll enroll them in credit and funding first, because now you're getting a performance fee off their capital raise. If you brought clients directly into the startup business funding package, in other words, not into your credit and funding first, then they get this value proposition, they go walk away with $250,000, and what do you get out of it? No performance fee, just the $1,250 from the front end or whatever you charged for it. So that's why this is normally an add-on. It's like you can go to a restaurant and just order the lobster bisque, but generally you order your meal and then you order the lobster bisque as a soup, or you get some appetizer before the meal. It's normally an add-on. So this is normally an add-on that you can decide if you want to add on to your client or not. Could it be sold as standalone? Yes, but just go into it eyes wide open. When you do that, there's no performance fee to the client. So you're not making any percent of that capital raise. And I guess you could argue that's great for the client. It's just not great for your branch's revenue. Ron's asking about minimum and maximum. You know, there really is no maximum. When we talk about the Chapman Fund, that's just one example. I mean, there's many other types of funding sources. This is just a unique one, a valuable one that is tied to the business address. But there's no maximum. We could do 1 million, 2 million, 5 million, 10 million, but you can start to see, as we talk about clients having a capital raise from the results of this, if you don't also have them under your credit and funding, then you're not getting any performance fee off of that. So just keep in mind, you can bring them directly here, but normally you'll bring them into credit and funding first. And then as we're going through their onboarding, make this as a recommendation if you determine that they have credibility issues. Trevor, last question for you. And uses of funds. So the Chapman Fund's pretty flexible, can be used for working capital, real estate, just about anything. It's not really a tightly restricted allocation of funds. So that's good. But it does have the hard cap. You'll get people mad as hornets at you. They'll say, I can only get 250,000. This is a scam. And you'd have to say, well, no, it's not a scam. We can get your first 250 here, and then we can stack and go after other capital raises afterwards. But that is the hard cap. And some people don't like that. They'll be angry with you, but just let them know that this could be just their first tranche. It doesn't have to be the final tranche or only tranche. All right, well, thanks, everyone. Hopefully now you're familiar with how this resource is both available to you, how it can be a resource for your clients, how to introduce it, how to explain it, how to enroll a client, and how you get paid. Hopefully we've covered that. We'll see you back tomorrow morning. Have a great day. Bye.